Question 1. John is applying for individual disability insurance. He works as a dentist, a profession that involves significant physical activity. When evaluating his application, the insurer is concerned about his health condition, which includes a previous back injury. How would the insurer typically handle this situation? A. The insurer may reject the application outright due to the pre-existing back injury. B. The insurer may offer coverage with a waiting period to account for the pre-existing condition. C. The insurer may accept the application and include a high premium rate without any exclusions. D. The insurer may offer coverage but with a rider that excludes any future claims related to back injuries. Answer: D. The insurer may offer coverage but with a rider that excludes any future claims related to back injuries. Explanation: disability insurance underwriting typically considers the applicant's health, occupation, and lifestyle factors, including pre-existing conditions. A back injury, particularly in a profession with physical demands like dentistry, would likely raise concerns for the insurer. In this case, the insurer may still offer coverage but include a rider that excludes back-related claims. This is a common practice in disability insurance when dealing with pre-existing conditions. A waiting period, option B, could also be considered, but exclusions related to specific conditions are more commonly applied. Question 2. Which of the following best describes the main difference between my own occupation and any occupation disability definitions in disability insurance policies? A. My own occupation covers any job the insured is unable to perform, while any occupation only covers their current occupation. B. My own occupation covers the insured's inability to perform the duties of their current occupation, while any occupation covers the inability to perform any occupation they are reasonably suited for. C. My own occupation refers to the insured's ability to work in any occupation, while any occupation is more restrictive and covers a specific list of jobs. D. My own occupation and any occupation are identical in the scope of coverage and are interchangeable terms. Answer: B. My own occupation covers the insured's inability to perform the duties of their current occupation, while any occupation covers the inability to perform any occupation they are reasonably suited for. Explanation: the distinction between my own occupation and any occupation is crucial in determining the scope of disability benefits. The known occupation refers to the insured's inability to perform their specific job duties in their current profession, which is generally more favorable for the policyholder, and any occupation is more restrictive definition, which covers the inability to perform any job for which the individual is reasonably suited based on education, training, or experience. This distinction is important in evaluating how and when benefits are paid, as the my own occupation definition may allow the insured to receive benefits even if they can perform other jobs. Question 3 scenario. Samantha, a 40-year-old administrative assistant, has been diagnosed with a severe form of arthritis which limits her ability to perform her job duties. She has disability insurance through her employer, which includes both short-term and long-term disability coverage. After taking time off to recover, Samantha decides to file a claim for long-term disability benefits. However, the insurance company informs her that her claim is denied because the policy has an exclusion for pre-existing conditions. What should Samantha do next to resolve the situation? A. She should file an appeal immediately, as the insurer cannot deny a claim based on a pre-existing condition if she has been insured for more than 12 months. B. She should accept the denial, as pre-existing condition exclusions are standard in most disability policies. C. She should contact her healthcare provider to obtain more evidence and submit a new claim, hoping the insurer will change its decision. D. She should seek legal advice and consider filing a complaint with the Oklahoma Insurance Department to investigate if the exclusion was properly applied. Answer: D. She should seek legal advice and consider filing a complaint with the Oklahoma Insurance Department to investigate if the exclusion was properly applied. Explanation: under Oklahoma law, as in most states, disability insurance policies may include exclusions for pre-existing conditions. However, these exclusions must be clearly defined in the policy and the insured must be made aware of them. If Samantha's condition was disclosed to the insurer at the time of application, she may have grounds to challenge the denial if the exclusion was improperly applied. Seeking legal advice or filing a complaint with the Oklahoma Insurance Department (OID) is a prudent next step to ensure the insurer is adhering to Oklahoma's consumer protection regulations. Filing an appeal, option A, could also be appropriate, but legal counsel and contacting the OID would help clarify if the exclusion was applied inappropriately. Question 4. Which of the following is most likely to be considered an example of residual disability under disability insurance policy? A. An individual who is unable to work due to a severe accident that results in total paralysis. B. An individual who can return to work but at a reduced capacity and lower earnings due to a serious illness. C. An individual who experiences temporary illness and is unable to perform any job functions for a few weeks. D. An individual who is permanently unable to perform their job duties and receives full disability benefits. Answer. B. An individual who can return to work but at a reduced capacity and lower earnings due to a serious illness. Explanation. Residual disability refers to a situation in which an insured person can return to work but at a reduced capacity, often resulting in lower earnings due to the effects of a disability. Disability insurance typically offers residual disability benefits to compensate for this reduction in income. This is distinct from total disability, where the individual is unable to perform any job functions at all. Options. And D. Temporary illness. Option C may qualify for short-term disability, but residual disability specifically refers to a partial loss of income despite returning to work. Question 5. When considering disability insurance for a self-employed individual, which of the following factors is most important in determining their eligibility for coverage? A. The individual's work schedule and ability to take sick leave. B. The individual's annual income and ability to provide medical records of health conditions. C. The individual's occupation and the perceived risk of injury or illness associated with it. D. The individual's prior claims history with health insurance providers. Answer. C. The individual's occupation and the perceived risk of injury or illness associated with it. Explanation. For self-employed individuals, their occupation plays a critical role in determining eligibility for disability insurance. Insurers will assess the risks associated with the individual's occupation, as high-risk jobs may result in higher premiums or additional exclusions. While income, option B, is a factor in determining benefit amounts, the occupation's risk profile is key to underwriting decisions. Sick leave, option A, and prior health insurance claims, option D, are generally less relevant than the occupational risks when determining eligibility. Question 6. In Oklahoma, what is a key provision of the state's disability insurance regulations regarding group disability insurance policies? A. Employers must offer group disability insurance to all full-time employees without exceptions. B. Disability insurance premiums for group policies are exclusively paid by the employer. C. Group disability policies must provide minimum benefit level for employees who meet eligibility criteria. D. Employees who opt out of group disability insurance are prohibited from purchasing individual policies. Answer. C. Group disability policies must provide a minimum benefit level for employees who meet eligibility criteria. Explanation. Oklahoma requires that group disability insurance policies provide a minimum benefit level for employees who meet the eligibility criteria, ensuring employees are adequately covered in case of disability. Employers are not required to offer group disability insurance to all employees. Option A, and while premiums can be shared between employer and employee. Option B, the employer is generally not required to pay all premiums. Option D is incorrect because employees are still permitted to purchase individual policies even if they opt out of a group plan. Question 7 scenario. Linda, a 35-year-old marketing executive, has purchased an individual disability insurance policy, and after being diagnosed with a chronic health condition that affects her ability to perform her job duties, she files a claim for long-term disability benefits. However, the insurer denies her claim, citing a pre-existing condition clause in the policy. Linda was not diagnosed with the condition before purchasing the policy, but she had experienced symptoms for several months prior. What action should Linda take to address the denial? A. Accept the denial, as pre-existing conditions are automatically excluded in all disability policies. B. Appeal the decision, as the insurer cannot deny her claim unless the condition was explicitly mentioned as a pre-existing condition before the policy's effective date. C. Contact her healthcare provider to obtain new documentation and resubmit her claim. D. File a complaint with the Oklahoma Insurance Department arguing that the insurer's pre-existing condition clause is overly broad and unfair. Answer. B. Appeal the decision, as the insurer cannot deny a claim unless the condition was explicitly mentioned as a pre-existing condition before the policy's effective date. Explanation. In Oklahoma, disability insurers can deny claims based on pre-existing conditions only if the condition was diagnosed or treated before the policy's effective date. If Lina was not officially diagnosed before purchasing the policy, the insurer should not be able to deny a claim solely based on symptoms. The best course of action is to appeal the decision, option B, with supporting medical documentation. Filing complaint, option D, with the Oklahoma Insurance Department is also an option, but the first step should be an appeal. Option is incorrect because pre-existing condition clauses are not automatic exclusions in all policies, and option C would not address the underlying issue of the pre-existing condition clause. Question 8. Which of the following is not typically a feature of a long-term disability insurance policy? A. A benefit period that extends from a few months to several years, or even to age 65. B. A shorter elimination period compared to short-term disability insurance. C. A benefit amount that replaces a portion of the insured's lost income. D. Provision that requires the insured to submit to periodic medical reviews to confirm continued disability. Answer. B. A shorter elimination period compared to short-term disability insurance. Explanation. Long-term disability insurance typically has a longer elimination period compared to short-term disability insurance, which provides benefits after a brief waiting period, often as little as 1 week or 30 days. Long-term disability insurance is designed to provide income replacement after a more extended period of disability, and the elimination period for these policies can range from 90 days to several months. The other features listed, A, C, and D, are common to long-term disability insurance policies, including an extended benefit period, partial income replacement, and the requirement for medical reviews. Option D. Question 9. Which of the following statements about the coordination of benefits between disability insurance and Social Security disability insurance (SSDI) is correct? A. SSDI benefits are not coordinated with private disability insurance policies and do not affect the payout of private benefits. B. Private disability benefits are typically reduced by the amount of SSDI benefits received, preventing overcompensation. C. SSDI benefits are always higher than the benefits provided by private disability insurance policies. D. Private disability insurance benefits are paid on top of SSDI benefits without any reduction. Answer. B. Private disability benefits are typically reduced by the amount of SSDI benefits received, preventing overcompensation. Explanation. When an individual receives both private disability insurance benefits and SSDI, private insurance providers typically coordinate benefits by reducing the payout of private disability benefits to account for the SSDI benefits received. This prevents overcompensation, ensuring that the combined benefits do not exceed the insured's pre-disability income. This coordination is a standard practice to ensure that the insured receives a reasonable level of income replacement while avoiding excessive payments. Option is incorrect, as SSDI benefits are often coordinated with private benefits. Option C is incorrect because SSDI benefits are generally lower than private disability insurance benefits. Option D is also incorrect, as most policies reduce their benefits when SSDI is involved. Question 10. In which of the following cases would a disability insurance policy likely not provide benefits under the partial disability clause? An individual who sustains a minor injury and is able to work, but with reduced hours and income. B. An individual who experiences temporary illness and returns to work at a reduced capacity. C. An individual who cannot perform any duties of their occupation due to a severe injury. D. An individual who can work in a completely different occupation while still receiving disability benefits. Answer. D. An individual who can work in a completely different occupation while still receiving disability benefits. Explanation. Under partial disability clauses, a disability insurance policy typically provides benefits to individuals who can return to work but with reduced hours or capacity, leading to a loss of income. However, if the individual can perform an entirely different occupation that does not involve the disability, they would likely not qualify for partial disability benefits, as the policy generally requires a loss of income or ability to perform the duties of their original occupation. Option C refers to total disability, not partial disability, and would typically qualify for benefits. Question 11. Which of the following is the primary purpose of an elimination period in a disability insurance policy? A. To determine the duration of the benefit period. B. To set a waiting period before benefits become payable after a claim is made. C. To reduce the premium cost of the policy. D. To specify the maximum amount of benefits the policy will pay. Answer B. To set a waiting period before benefits become payable after a claim is made. Explanation. The elimination period in a disability insurance policy is essentially the waiting period that the insured must wait before benefits become payable after a claim is filed. This period can range from a few days to several months depending on the policy. It helps reduce the cost of premiums and ensures that the insured's condition qualifies as more long-term disability before benefits begin. Question 12. Which of the following situations would typically result in the cancellation of a disability insurance policy? A. The insured stops paying premiums for more than 60 days. B. The insured is diagnosed with a new medical condition not listed in the policy. C. The insured starts a new job with a higher salary. D. The insured becomes eligible for Social Security disability insurance benefits. Answer A. The insured stops paying premiums for more than 60 days. Explanation. If the insured fails to pay premiums for an extended period, usually 60 days or more, the disability insurance policy may be cancelled or lapse. The other scenarios, B, C, and D, do not typically result in policy cancellation, as insurers generally cover new conditions or offer continued coverage if premiums are paid and the insured remains under the policy terms. Question 13. Which of the following is most likely to be excluded from coverage under a disability insurance policy? A. Disabilities caused by accidental injuries. B. Disabilities arising from a pre-existing medical condition. C. Disabilities caused by a car accident. D. Disabilities caused by a workplace injury. Answer B. Disabilities arising from a pre-existing medical condition. Explanation. Many disability insurance policies contain an exclusion for pre-existing conditions, meaning they will not provide coverage for disabilities that are caused by or related to conditions that existed before the policy's effective date. Accidental injuries, car accidents, and workplace injuries are generally covered unless explicitly excluded by the policy. Question 14 scenario. John has a disability insurance policy with a 90-day elimination period and a benefit period of 2 years. After being involved in a car accident, he is unable to work for 120 days. How much will John receive from his disability insurance policy in the first 120 days? A. Full benefits for 120 days minus the 90-day elimination period. B. No benefits because the 90-day elimination period was not met. C. 90 days of benefits after the elimination period, starting on day 91. D. Full benefits for the first 90 days, then reduced benefits for the next 30 days. Answer C. 90 days of benefits after the elimination period, starting on day 91. Explanation. Since John has a 90-day elimination period, he will not receive benefits during the first 90 days. After completing the elimination period, his benefits will begin and he will receive benefits starting from day 91. The total duration of benefits depends on the policy's benefit period, 2 years in this case, but the first 90 days are typically not covered. Question 15. Which of the following options is a key benefit of a return of premium rider in a disability insurance policy? A. The policyholder can receive a refund of premiums if they remain disability-free. B. The policyholder can increase their benefit amount if they suffer a significant loss of income. C. The policyholder can continue to receive benefits after the initial benefit period ends. D. The policyholder's premiums will be waived if they become disabled. Answer A. The policyholder can receive a refund of premiums if they remain disability-free. Explanation. A return of premium rider allows the policyholder to receive a refund of premiums paid if they do not become disabled during the term of the policy. This feature is attractive to individuals who want to ensure they get value from their policy even if they never file a claim. It typically comes with a higher premium cost but provides a form of financial return for healthy policyholders. Question 16. Which of the following is true about short-term disability insurance? A. It provides long-term income replacement and is typically for a period of 2 years or more. B. It generally covers a portion of the income lost due to illness or injury, typically for a short period of time. C. It usually has a high elimination period, making it suitable for long-term disabilities. D. It is exclusively offered by the government and is not available through private insurers. Answer B. It generally covers a portion of the income lost due to illness or injury, typically for a short period of time. Explanation: short-term disability insurance typically provides income replacement for a brief period, usually ranging from a few weeks to a few months. It is designed to cover temporary disabilities such as recovery from surgery or illness. It does not cover long-term disabilities, and its elimination period is often short, making it an immediate source of income replacement for temporary conditions. Question 17. Which of the following describes the lone occupation definition of disability in a disability insurance policy? A. The insured is considered disabled if they cannot perform any occupation for which they are qualified. B. The insured is considered disabled only if they cannot perform the specific duties of their current job. C. The insured is considered disabled if they are unable to perform basic physical tasks, regardless of occupation. D. The insured is considered disabled only if their injury prevents them from working in a similar job in another industry. Answer: B. The insured is considered disabled only if they cannot perform the specific duties of their current job. Explanation: the lone occupation definition of disability is more favorable to the insured because it considers them disabled if they cannot perform the specific duties of their current job, even if they are able to perform other types of work. This contrasts with the any occupation definition, which would require the insured to be unable to perform any work for which they are reasonably qualified. Question 18. Which of the following is a common exclusion in most disability insurance policies? A. Injuries sustained while performing military service. B. Accidental injuries that happen while at home. C. Disabilities resulting from natural disasters. D. Disabilities caused by work-related accidents. Answer A. Injuries sustained while performing military service. Explanation: disability insurance policies often exclude injuries or disabilities caused by military service or war-related activities. These exclusions are standard in both private and group policies, as they are typically covered under military or government-provided benefits such as Veterans Affairs. The other situations, B, C, and D, are generally covered unless specified exclusions exist. Question 19. Which of the following is a key feature of a cost of living adjustment COLA rider in a disability insurance policy? A. It increases the benefit amount to keep pace with inflation. B. It allows the insured to receive more benefits after the initial benefit period ends. C. It reduces the elimination period for receiving benefits. D. It waives premiums if the insured becomes disabled. Answer A. Increases the benefit amount to keep pace with inflation. Explanation: a cost of living adjustment COLA rider increases the disability benefits over time to keep up with inflation. This ensures that the purchasing power of the benefits does not erode due to rising living costs. It typically applies after the policyholder has been receiving benefits for a certain period, and the benefit amount is adjusted periodically based on inflation rates. Question 20 scenario. Sally, a 45-year-old executive, is involved in a car accident and sustains a severe back injury that prevents her from working for several months. Her disability insurance policy has a residual disability provision. After returning to work part-time, Sally is still unable to perform her job full-time due to ongoing pain. How will her benefits likely be affected? A. She will not receive any benefits because she returned to work part-time. B. She will receive full benefits as long as she continues to work part-time. C. Her benefits will be reduced based on her partial income loss. D. She will receive a lump sum payment for her total disability. Answer C. Her benefits will be reduced based on her partial income loss. Explanation: under a residual disability provision, Sally would receive benefits proportional to the income she lost due to her partial disability. Since she is able to work part-time but is still unable to perform her full-time duties, her benefits will be reduced based on her loss of income. This type of provision is designed to help those who are partially disabled but can still engage in some form of work. Question 21. Which of the following describes a group disability insurance policy? A. It covers a single individual and their dependents. B. It is issued to an employer and covers all eligible employees. C. It is typically more expensive than an individual disability insurance policy. D. It provides long-term disability benefits exclusively for self-employed individuals. Answer B. It is issued to an employer and covers all eligible employees. Explanation: group disability insurance policies are typically issued to an employer and provide coverage to eligible employees. The premiums are often lower than individual policies because the risk is spread across a large group Group policies may also offer coverage for short-term or long-term disability, depending on the terms of the policy. These policies usually do not cover dependents and are not specific to self-employed individuals. Question 22. Which of the following is typically covered under a disability insurance policy with an own occupation? Definition of disability: a surgeon who is unable to perform surgeries but can work in a different capacity within the medical field. B. A teacher who is unable to work but can perform other office jobs. C. An accountant who can no longer perform their accounting tasks but can work as a consultant. D. A writer who cannot write but can work as an editor. Answer A. A surgeon who is unable to perform surgeries but can work in a different capacity within the medical field. Explanation: lone occupation definition of disability means that the insured is considered disabled if they cannot perform the specific duties of their occupation, even if they can perform other types of work. In this case, a surgeon who cannot perform surgeries but can work in a different medical role, e.g., consulting, would still qualify as disabled under this type of policy. Question 23. Which of the following is a typical feature of a waiver of premium rider in a disability insurance policy? A. It waives premiums for a specific period after the policyholder becomes disabled. B. It increases the policyholder's benefit amount after disability occurs. C. It allows the policyholder to receive retroactive benefits for any missed premiums. D. It allows the insured to reduce premiums after certain age. Answer A. Waives premiums for a specific period after the policyholder becomes disabled. Explanation: a waiver of premium rider allows the policyholder to stop paying premiums after becoming disabled, typically after a waiting period. This rider helps prevent the policy from lapsing due to non-payment while the insured is unable to work. It is an important feature for those who want to maintain coverage during a period of disability without the financial burden of paying premiums. Question 24. If a disability insurance policy contains a benefit period of 5 years, what does this mean? A. The policy will provide benefits for the first 5 years of the insured's life. B. The insured will receive benefits until they are no longer disabled, but for no longer than 5 years. C. The insured must prove disability every 5 years to continue receiving benefits. D. The policyholder must wait 5 years before receiving any disability benefits. Answer B. The insured will receive benefits until they are no longer disabled, but for no longer than 5 years. Explanation: the benefit period is the maximum duration that disability benefits will be paid under the policy. If the policy has a benefit period of 5 years, the insured will receive benefits as long as they remain disabled, but they will not receive benefits beyond the 5-year limit. Once the 5 years are up, benefits stop regardless of whether the individual is still disabled. Question 25. Scenario: Laura, a software engineer, develops a severe wrist injury and is unable to continue working full-time. Her disability insurance policy has a 60-day elimination period and a 2-year benefit period. She misses work for 45 days, then starts working part-time. How will her benefits be affected? A. She will receive full benefits for the first 45 days, then no further benefits. B. She will receive partial benefits for the 45 days and full benefits after the elimination period. C. She will not receive any benefits because she returned to work part-time. D. She will receive benefits based on the income she loses due to her injury. Answer D. She will receive benefits based on the income she loses due to her injury. Explanation: Laura's policy likely includes residual disability provision, meaning she will receive partial benefits if she returns to work part-time and continues to experience income loss due to her injury. After the elimination period of 60 days, her benefits will be adjusted based on how much income she loses compared to her pre-disability earnings. Question 26. What is the typical maximum monthly benefit that disability insurance policies will provide? A. The insured's full monthly salary. B. Fixed amount, regardless of income. C. 80% to 100% of the insured's monthly income, subject to maximum limit. D. The sum of the insured's annual salary. Answer C. 80% to 100% of the insured's monthly income, subject to a maximum limit. Explanation: most disability insurance policies provide a benefit that covers 60% to 80% of the insured's monthly income up to a specific maximum amount. This ensures that the insured can maintain their standard of living while they are unable to work, but the benefit is capped to prevent overinsurance and to control the cost of the policy. Question 27. Which of the following is typically not covered by a disability insurance policy? A. Disabilities caused by a sudden and accidental injury. B. Disabilities resulting from a chronic medical condition such as cancer. C. Disabilities caused by a pre-existing medical condition. D. Disabilities resulting from a temporary illness such as a cold. Answer: D. Disabilities resulting from a temporary illness such as a cold. Explanation: disability insurance policies are designed to provide coverage for long-term disabilities such as those resulting from injuries or serious medical conditions. Temporary illnesses like a cold or mild flu are generally not considered disabilities under the terms of the policy and would not be covered. Question 28 scenario: Mark is self-employed and purchases a disability insurance policy. After 6 months he sustains a back injury that prevents him from working. His policy has a 30-day elimination period and a benefit period of 2 years. How soon after his injury will Mark begin receiving benefits? A. Immediately after the 30-day elimination period. B. After 30 days of missed work, Mark will receive full benefits. C. After 60 days, Mark will receive partial benefits. D. After 90 days, Mark will start receiving benefits. Answer A. Immediately after the 30-day elimination period. Explanation: since Mark's policy has 30-day elimination period, he must wait 30 days after the injury before benefits begin. After this period, he will receive his benefits as long as his disability continues and is within the 2-year benefit period. Question 29. Which of the following is the main disadvantage of purchasing individual disability insurance? A. It typically covers a longer benefit period than group policies. B. It may be more expensive than group disability insurance. C. It provides fewer benefits than group policies. D. It usually requires a waiting period before benefits are paid. Answer B. It may be more expensive than group disability insurance. Explanation: individual disability insurance policies are often more expensive than group policies because the risk is concentrated on a single person and the premiums are based on the individual's health, occupation, and other factors. Group disability insurance spreads the risk across larger pool, often resulting in lower premiums. Question 30. Which of the following typically occurs if an insured individual misrepresents their medical history on a disability insurance application? A. The policy may be voided and benefits may not be paid for claims related to the misrepresented condition. B. The insured will automatically receive reduced benefits for the first year. C. The insured will be required to pay higher premiums for the entire policy term. D. The insurer will refund all premiums paid if a claim is made. Answer A. The policy may be voided and benefits may not be paid for claims related to the misrepresented condition. Explanation: misrepresenting medical history or omitting material information on a disability insurance application can result in the policy being voided. If a claim is made related to the condition that was misrepresented, the insurer may refuse to pay benefits. This is a key reason why applicants must provide accurate and complete information when applying for insurance coverage.